FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And let's talk about the daily high and the daily low. Alright guys, so welcome back. Let's go ahead and get started here for us. So first, let's go ahead and let's just break down first when we talk about the daily high and the daily low. Now, we know that every single day, I can guarantee you 100% there's going to be a daily high and there's going to be a daily low. All right. That's going to happen every single day, no matter what. So now your job is essentially to try and find the daily high and try to find the daily low and basically trade off of it. Right. So that's the goal, right? That's going to give you the best possible odds of getting a positive trade in your favor. When we talk about daily highs and daily lows, what does it look like? First and foremost, we know, let's go ahead and just draw out, let's say an Asian box here, right? Here we have, let's say an Asian box here. This yellow line, let's say, represents 5 p.m. Eastern Standard Time, right? So this is essentially the reset, right? The 5 o'clock here. So what happens at 5 o'clock? So 5 o'clock, the daily high and low reset, right? And typically, what do we see during this part of the sessions, right? Essentially, what happens is price tends to essentially go between a support and resistance area that's determined by the market maker, by the broker, right? So the ideal range, of course, is under 50 pips. Anything over it, highly very likely, anything over 50 pips would have something to do with news inducement, okay? But anyway, so essentially what do we get? We get basically the highs and lows, initial highs and lows, highs and lows, highs and lows, right? As we're getting into Asian session, so as Tokyo opens, and then once we get into about an hour or so before the opening of the London session, right? Typically what happens, we get some kind of a swing like this outside of the box, and they start to basically set the new highs and lows that we're going to have for the day. Now, the important thing is that you need to understand that if you're trading a London session, you really want to be more focused on the pattern than the actual high or low of the day. The reason is because you don't know if you're going to be trading the high or the low of the day. Okay, because you're just starting out during London session. During the US session is something completely different because you already see what the London session has done. So you know essentially whether you're looking for the high or the low of the day. Okay, so US session for trading off of the high and the low of the day is way much easier because obviously you already have the data from the London session. So if you're trading the London session, just make sure that you're focusing more on the pattern than anything else. Pattern and timing. And then once you get pattern and timing, then you can see about maybe if you find something where you could say, hey, we're pretty close to creating a high of the day or something like that. So something like this, let's say if it were to do something like that, then yes, right? You can say, hey, we're trading off the high of the day. Here's the type 1 pattern, and it's happening at like, whatever, 4:30 or something, so all that would go together. But because the London session, you don't know whether during the London session, you don't know essentially whether it's going to create the high or the low, right? So you don't know. So that's why I tell you to focus more on the pattern during London, and then on the US session, you can definitely focus more on trading off of either the high or the low of the day because it's a lot more easier to spot, and that just makes a lot more sense for you. So because we're a little bit at a disadvantage when it comes to the London session. We have to really depend more on the pattern than the actual high of the day, higher or low of the day. What I have noticed in backtesting is that typically the high or low of the day is created anywhere from 3 to about 7 o'clock. So anywhere from 3 to 7 o'clock typically is when the high or the low is created during the London session. Now that's not always 100%, but that is the majority of the time. Sometimes it'll happen right at 3. Sometimes it'll happen at 5. Every day is going to be different, obviously. Hell, sometimes you will see that the high of the day was literally created, at let's say 5 o'clock in the afternoon when the reset happened, because the actual pair moves straight down. So essentially you would have a situation like this where you would have, let's say, your Asian session here, and then price would have done something like this, and then it just continues on over, right? And by the time you get to the, let's say, London Open, you're pretty much trading like hopefully off the low of the day, potentially back up, right? But that's definitely something that will happen, and I've seen happen on numerous times, where the actual high of the day, or even the low of the day, because sometimes it'll actually go from the reset here, it'll go here and it'll just go straight up, right? And then it'll come down and do whatever. But typically that definitely can happen, and typically happens more on the NZD AUD pairs and JPY pairs, because those are the ones that are trading mostly during that first half of the session during the Australian Open. So Australian, New Zealand pairs, that happens a lot more on those specific pairs. So every day we get a high, every day we get a low. It's going to happen no matter what. Like I said, here's the low, here's the high. And here you can really see what I was just literally talking about when I'm talking about the reset being here at 5, and here's the low of the day being created while the high is being created over here during the New York session. So same thing here. You can see this is Euro NZD, and you can see here high is created literally right after the reset, and then the low is during the New York session. See, same thing here, same thing there. So the idea basically is that the high or the low of the day will be created during London, and then the opposite of that will happen during the opening of the US session. That is like the ideal type of setup. So here, in this example, you're looking at the high of the day being created during London, and then the low of the day being created during the New York session. If you're wanting to trade off the high and the low of the day, it really favors the New York session, because you can already see whether the high or the low was created during London or Asia. So it gives you a huge advantage. So if that's the kind of like trading style that you want to go with, then you're probably looking at trading more of the US session because of it. I would strongly recommend that if you're going to just trade off the high and the low of the day, just make sure that you do back testing. That way you can know how it's going to perform on a specific pair. And obviously, every pair is going to be different. So if you want to do this, just, obviously pick a pair and then do 3 to 6 months, go back in the charts and do some back testing and see, write down what are the common times of the high and the low of the day. How many times, if you go back 3 or 4 months and you write down exactly, hey, we had the high of the day happened at 10 p.m. Eastern time during Tokyo. How many times did that happen throughout a 6-month period? You know, if you write all this stuff down, if you go back and you write all this stuff down, you have some very invaluable data there that can help you, you know, with your trading and knowing, hey, this specific pair behaves in this fashion, you know. And so most of the highs of the days are created during this specific time frame, or most of the lows of the day were created during this specific time frame during the US session. So all this data that you can get, that you can collect, is there. It's there for you to collect, you know. The biggest thing is, are you willing to go back into the charts and actually collect it? Because the stuff is there for you to collect, you know. But can you actually go in there and go back and collect it? You know, those are the parts that, like, nobody wants to do. Everybody wants to fucking to make the trades happen and shit like that, but they don't want to go back and do the work. You know, so if you are willing to go back and do the work, then you'll have all that data. And you'll know exactly how that pair behaves. You'll get a lot more data than what you think you might get if you just go back and do it. All right. So if you're going to trade this, just know that typically what we look for is for a high and low to be created during the first 4 hours of London, and then obviously the same thing, the opposite, to happen on that same pair during the first 4 hours of the US session. Does it always happen? No, it doesn't always happen like that, but that's the ideal way, that's the ideal setup. And truly, if you want to be consistent on anything, right, if you just worry about that window and focus on that specific window and catching the highs and lows that only appear during that specific window, then you'll grow to be consistent because you're consistently doing the same thing. Okay? But just pick a pair, guys, and literally just go back. It's very simple. Every day there's a high and there's a low made, right? Your job is to trade off of that. Your job is just to trade off of it. It's pretty simple. So don't overcomplicate it. Okay? Don't overcomplicate any of this stuff. Keep it very simple. All right? You know you're looking for a high or the low of the day to happen during the first 4 hours of London, and the same thing during the US session. That's it. If you want to really get down to the nitty-gritty of getting all the details for specific times that happen over and over on a specific pair, go back 6 months, and I guarantee you, write down every single time for every day for that specific pair that had a high or that had a low, and you will see a pattern develop of a specific time gap that it happens on every time. And if you have that time gap, you already know when it's going to happen. That's where you get your advantage that you're looking for in trading this. All right, guys. So I hope you enjoyed this video as much as I enjoyed making it for you guys. Thank you so much for all your support and all your comments, and have a good weekend. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN Masterclass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data. Not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys, and take care of yourselves.